Did you know that over 80% of major market moves happen within specific time windows? If you're not trading at the right time, you're missing out on the best opportunities. Today, we're breaking down one of the most critical elements in day trading: timing and kill zones. If you've ever wondered why some trades fail while others skyrocket, the answer often lies in timing. By mastering kill zones, you'll be able to anticipate market moves, refine your entries, and avoid low-probability trades. In this video, we're not just talking theory. We'll show you step-by-step how to build a trading plan based on kill zones and how to read the charts like a pro. We always appreciate your support, so please give this video a thumbs up and subscribe to our channel if you are new. See you after intro. Welcome back, traders. So, let's get started. What exactly are kill zones? Kill zones are the specific times during the trading day when the market experiences high liquidity and volatility, and also major price movements. These are the moments when big players like banks and institutions are most active, often manipulating price before making a strong move. By understanding kill zones, traders can avoid getting trapped and take advantage of high-probability trade setups. The most important element in trading is timing, especially for day trading and intraday trading. By considering kill zones, we can focus on a specific window of time and filter out risky trades. Our main priority should be timing and kill zones first, then assessing price action to identify trade opportunities. Kill zones are categorized into three main trading sessions: the Asian session, the London session, and the New York session. Let's start with the Forex kill zones before briefly looking at indices and cryptocurrency kill zones. In Forex, kill zone times are based on Eastern Standard Time. Our Asian kill zone starts at 8 p.m. and ends at 12 a.m. London kill zone opens at 2 a.m. and closes at 5 a.m. New York begins at 7 a.m., lasts for 3 hours, and ends at 10 a.m. London close kill zone runs from 10 a.m. to 12 p.m. Before diving into each kill zone and analyzing price behavior, it's important to first understand the market phases. So, let's do a quick breakdown of market phases before moving forward. The market moves through three main phases: accumulation, manipulation, and distribution. Price is always cycling through these phases. Imagine it like a never-ending loop. First, the price accumulates. Then it gets manipulated. And finally, it's distributed before the whole process starts over again. This pattern is what we call the power of three, and it's basically the heartbeat of the market. The price goes through an accumulation phase, which is essentially a period of consolidation where the price moves sideways. Then, it manipulates by taking out liquidity, and finally, it distributes within the range that the manipulation created. Price usually accumulates in the Asian kill zone, manipulates in the London kill zone, forming the day's high or low, then distributes in the New York kill zone. The London close serves as the ideal profit-taking period, where price often finalizes the high or low of the day. But here's a pro tip to keep in mind. If the price has expanded instead of accumulating during the Asian kill zone, don't expect the London to manipulate. Instead, you should expect it to accumulate, which means you'd then look for the New York and London close kill zones to manipulate. So, it all comes down to what the Asian kill zone did. Just check out the Asian first, and that will give you the most accurate way to identify the market's upcoming future behavior. Regarding timeframes, the 15-minute chart is your best bet for recognizing these patterns. It gives you clear price action that also aligns with higher timeframes. There are specific kill zones for indices and the cryptocurrency market, which closely follows the movements of the index market. The New York AM session runs from 8:30 a.m. to 12 p.m. Then comes the lunch hour, 12 p.m. to 1 p.m., during which we avoid taking trades due to low volatility. Finally, the PM session runs from 1 p.m. to 4 p.m., offering new trading opportunities. Now, let's bring everything together and dive deeper into the key concepts we need to consider when analyzing Forex kill zones. Let's say we have a bullish market profile. Price enters the Asian kill zone and starts consolidating within the Asian range, going through the accumulation phase. Then, at 12 a.m., we have the New York opening price. At this point, we expect price to enter the manipulation phase by dipping below the Asian range and eventually tapping into a previous PD array. This PD array could be a fair value gap, an order block, a breaker block, or a mitigation block. At this stage, the price has completed both the accumulation and manipulation phases, meaning it's now ready to distribute. Based on this expectation, you could take an aggressive buy position below the New York opening price from the PD array when the price reaches it. However, if you prefer a more conservative entry, you should wait for an expansion move that forms a market structure shift. Then, you can take a position from the optimal trading zone or any PD array that forms there. As price continues, we can expect it to expand higher and enter the distribution phase. Of course, this scenario does not play out exactly like this every time, and there can be variations. However, this represents the ideal ICT buying bias, where price forms the daily low through manipulation in the London kill zone, and then pushes higher during the distribution phase. When price enters the New York session, one of two scenarios is likely to occur, either a reversal or a continuation. However, in most cases, the market continues in the direction established by London. At 8:30 a.m. New York time, if the price has already reached the higher time frame draw on liquidity, it is more likely to reverse at the 8:30 a.m. opening. However, if price hasn't yet reached the higher time frame's draw on liquidity, we can look for another buy position from the optimal trading zone or any newly formed PD array, aiming for the higher time frame's draw on liquidity. Since we expect price to continue moving higher, London close typically marks the high or low of the day, making it a key profit-taking kill zone. Once price taps into the higher time frame draw on liquidity, it often retraces back down to close the day. From the Asian kill zone to London close, this is the key price behavior to watch for in your daily market analysis. The daily opening price is formed during the Asian kill zone at midnight New York time. The daily low is typically formed during the London kill zone. The daily high and the daily candle close are usually formed during the London close kill zone. So traders, this is just a standard framework that gives you an idea of how price behaves at different parts of the day. It also highlights the importance and application of different price behaviors like accumulation, manipulation, and distribution in our daily analysis. Now, let's break down some key points and tips. But before we continue, if you're an experienced trader and need more capital, Funded Next is an excellent option. They're one of the top-rated prop firms on Trustpilot and offer some of the most unique services in the industry, including a 15% profit share from the challenge phase, the lowest package priced at $32, and many more. Plus, they provide flexible funding options to support your trading needs. Check out the link below to stay updated on the latest offers and special deals. The first key point is that you should try to take a buy position below the midnight opening price and the 8:30 a.m. opening when trading the New York kill zone. The areas within the kill zones have more priority and are more important, as they have a higher probability of success compared to areas outside the kill zones. It's generally better to avoid executing trades outside the kill zones, unless you've identified a trading setup that forms within the kill zone. For example, if you identify a PD array formed inside a kill zone, this PD array still holds its significance, even if price reaches it outside the kill zone, and you can still execute a trade based on it. Please keep in mind that price doesn't always behave in the exact pattern we've covered, and the market won't move this way every single time. There will always be variations. For example, you might see price not drop immediately after the 12 a.m. opening. It might first push higher to sweep the buy-side liquidity before targeting the sell-side liquidity and dropping down, or it may continue its sideways move before pushing lower. These are just different market scenarios that happen regularly, and you need to understand each one individually. The scenario we discussed is a general framework, a roadmap to help you understand market behavior and how it operates. Now, let's move on to the real chart and apply what we've learned so far. We'll see how the market behaves in different kill zones. Here, we have the Euro-Dollar 15-minute time frame displayed on the price chart. Before mapping out the market structure or conducting any analysis, let's first highlight our kill zones on the chart. We'll start with the Asian kill zone, which runs from 8 p.m. to 12 a.m., so I'll mark it on the chart. Next, we have the London kill zone, from 2 a.m. to 5 a.m. After that, we'll highlight the New York kill zone, which starts at 7 a.m. and ends at 10 a.m. Finally, right after New York, we have the London close kill zone, which begins at 10 a.m. and ends at 12 p.m. Now that we've marked all the kill zones, let's dive into analyzing the chart. If you look closely, you'll notice that before tapping into the Asian kill zone, price formed a large gap. These types of gaps create excellent trading opportunities because price tends to return to fill them before making a drastic move in the market. As you can see, after opening with a large gap at the beginning of the Asian session, price pushed slightly higher and then consolidated within the Asian kill zone. During this time, market volatility and volume remained low until the New York midnight opening. Once the New York midnight price opened, momentum started to build. And as expected, price pushed lower to take out sell-side liquidity below the Asian kill zone and fill the large gap left behind. Since price completed the manipulation phase by pushing below the Asian kill zone, triggering sell stops and the stop losses of Asian session traders, it then entered the London kill zone. During this phase, the price filled almost 50% of the gap before immediately reversing with strong displacement to the upside, leading to a market structure shift as it broke and closed above this swing high. This confirms that price accumulated within the Asian kill zone and completed the manipulation phase midway through the London kill zone, showing an instant reversal that caused both a market structure shift and the formation of a 15-minute PD array, in this case, a breaker block. This breaker block is represented by these two consecutive green up-close candles. Here, price formed a swing low, then a swing high, followed by a lower low, and an immediate reversal, a clear sign of smart money activity. This breaker block presents a high probability trading opportunity for a long position because the price has completed the accumulation and manipulation phases and is now showing clear signs of entering the distribution phase. These signs include a market structure shift, a sweep of sell-side liquidity, and filling the gap left behind. Secondly, price is positioned below the New York opening price, which aligns with our trading criteria, as we always look for trade entries below or above this key level. Additionally, price has formed a PD array within the London kill zone and provided an entry point inside the same zone, making it a more reliable and trustworthy setup, as we always aim to execute trades within kill zones rather than outside them. With all these factors in place, you could have executed a buy order at the highest point of the breaker block zone. For the take-profit target, you would aim for the buy-side liquidity above this swing high, or the supply area right here, as it presents a perfect area to target for an exit. Continuing forward, we can see that price distributed higher with strong bullish momentum throughout the London session, until it reached the New York kill zone. As expected, price continued its bullish move from the London kill zone, experiencing only a minor reversal around the 8:30 opening price, before pushing higher toward the upper draw on liquidity area. Eventually, price reached the London close, which we consider a profit-taking area. Following this, price tapped into higher time frame buy-side liquidity, triggering a retracement that led to a pullback, closing the day lower. So, traders, this is the framework you need to apply when mapping market structure or conducting technical analysis. By following this approach, you'll gain a clearer vision of the market's future movements, allowing you to identify high-probability trading setups and execute winning trades with maximum efficiency. That's it, traders. Thank you for watching this video. I hope you found it informative and useful. Don't forget to hit the subscribe button and turn on notifications to stay updated on our latest videos. We value your feedback and suggestions, so please leave your comments below and let us know what topics you'd like us to cover in our future videos.